Well, joining us now is Pramol Dhawan, the head of emerging markets portfolio management team at PIMCO. It's great to have you back on. Let's start right there. Does outperformance continue?
Yeah, we think it does, Morgan, and we think the outsized gains in emerging market equities and fixed income, as well as the non-dollar European equities and fixed income, were set to continue into the second half of the year. And really what's been driving that outperformance has been the capital reallocation story. So capital being pushed away from America into the rest of the world, where there's larger fiscal stimulus, some of it due to defense spending and infrastructure spending, but really that's going to be driving fundamental growth in European economies and emerging market economies, and that's really pushing equities to record elevated levels in emerging markets. And we think that continues, and the pressure of a weaker dollar and the converse to that is stronger emerging market countries. What that's creating is effectively a disinflationary backdrop for the rest of the world. That's allowing central bankers in emerging market economies to cut rates more aggressively. And we think we're just at the start of what can be a multi-year virtuous cycle where central bankers can lower rates, they can really focus on growth versus inflation. And this month alone, Morgan, just for a statistic, the number of emerging market central bankers that are cutting rates jumped from 28% of countries to over 60%.
Wow.
And that's emblematic of us being in this virtuous cycle.
So you expect disinflation to continue to set into emerging markets in large part because of a weaker U.S. dollar, and that therefore speaks to the divergence we're seeing between the Fed and so many other central banks who are cutting right now.
Yeah, that's right. And we think we're just at the start of this. This is early innings. The U.S. equities are a couple of points higher, but in non-dollar terms, they're substantially underperforming European equities and emerging market equities. And really, that's the story. There's a huge amount of capital reallocation that's going on, diversification away from the U.S. into the rest of the world. And we think this is a very target-rich environment. Whether it's in EM or international bonds, there are great opportunities outside of the U.S. that command attention for investors that are going to allocate capital to these against the backdrop of really very low ownership. And that capital flow is happening very quickly, and that's driving asset prices forward. And that's going to create this virtuous cycle, allowing central bankers to really focus on growth. And that will feed into this positive feedback loop.
How much do trade deals and trade negotiations and the tariff backdrop matter to this investment thesis moving forward?
Yeah, look, July the 9th is an incredibly important day with the termination of the 90-day trade window that we have. We'll see what the administration decides to do, whether they decide to re-up and roll it a little bit further or negotiate and cut some deals ahead of that. I think trade is really at the center of emerging markets investment performance. But for the U.S., they have to make an important decision on what they want to be able to do and the message they want to be able to send to the rest of the world. Right now, they've weaponized effectively their current account. 899 in the tax bill is effectively doing the same on the capital account as well. That serves to discourage inward investment to the U.S. So that investment has to find a home, and it has to find a home somewhere. And just given the under ownership of emerging markets, a lot of that's finding its way to EM equities and EM fixed income.